Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm pleased to have Alasdair Macleod with me once again. Alasdair writes a very important and fundamentally sound financial commentary every week titled Gold Money Insights. It is posted every Thursday on the research page at goldmoney.com. His views are based largely on free market economics, but Alasdair is certainly not a rigid ideologue. He is a free thinker who examines the world as it actually exists, not as Keynesian economists think it ought to exist. And as such, he is very much in tune with Austrian economic theory, which, in my view, most closely exhibits the economic actions of free human beings. And that is why I'm always pleased to have Alasdair with me. He's here once again, and thank you so much for joining me, Alasdair.
That's my pleasure, Jay.
It is always good to have you. We just so many things to talk to you about. So let's get going. I have to ask you about the end of fiat hoving into view was the title of your March 10th missive. Can you define the word hoving as it's used in that title?
Yes, I suppose coming into view, as it were. I didn't realize, perhaps my vocabulary is a little old-fashioned, but anyway, I do apologize for that.
Well, I don't know if it's old-fashioned or not. It's just a British saying, I think, more. Probably not old-fashioned in Britain so much. It's just something that I wasn't used to hearing, and so coming into view would be more like it, I guess. The end of fiat money coming into view, I guess, is what you meant. Yeah. In that article, you stated the following, and I quote once again, I think I read this quote last time we talked. Putin made a huge mistake invading Ukraine, but the West's reaction by seeking to isolate Russia and its commodity exports from the global marketplace is an even greater one. Now, 2.5 weeks or so passed since we last spoke. Do you still believe that, more or less?
Yeah, pretty much. I mean, I think events have rather confirmed that view, and of course, the effect of this has been to drive up commodity prices. So, what Russia has lost in terms of sales volume, they've made up on price, and they can afford to sell oil, for example, at a substantial discount to their friends. And the amount of oil and gas that they sell to Europe is actually a very large quantity in terms of money. And I really do think that this move to basically what Putin has done is he's invoked a force majeure clause, which I'm sure is in all the contracts, all the oil and gas contracts. To change the currency in which he is paid, and he's taking it back to rubles, which basically means that over the course of a year, a very large amount of rubles will have to be bought. I think we're looking at about 2.5 trillion euros. Not euros, rubles. Mm-hmm. Will have to be bought in order to pay for essential oil and essential natural gas, and that is a very, very clever move. It is exactly what President Nixon and Kissinger did with the Saudis back in 1973, and it created the petrodollar. And it meant that everybody had to buy dollars in order to pay the Saudis and every other member of OPEC. Very smart move then, and it's the same playbook.
Yeah, actually, you could make the case that Russia, with its population, is a more legitimate country to own the petrodollar or petrocurrency than the U.S., because the U.S. had to go around. Well, we produced oil and gas at that time, but we really got the Saudis, the big oil producers, to back up. We told them, we made the arrangement that they had to sell their oil in dollars, and of course countries all around the world that had to be net importers of oil had to go out and buy dollars. So that is really what made the U.S. own the world's reserve currency after Nixon took us off the gold standard, right? And so do you think anybody's taking Putin up on this? Because the Germans come right out and said, no way. You got to honor your contract. We don't have any contracts that we have to give you that we have to pay for it in your currency.
Well, I can understand that political reaction, but the
Yeah.
reality is that every contract has a force majeure clause. And basically, what's happened is that the Western nations, including the buyers of this oil themselves, the EU, have turned round and changed the whole thing. So the Russians, as far as I can see, are perfectly entitled to respond by saying, right, we want payment in rubles. And if we don't get paid in rubles, no oil, no gas. I mean, it's as simple as that. I mean, that is the choice. And what it would mean is that the EU nations would then have to scramble to get what they can from other sources. And there is not a lot of if you like, sort of flexibility in the whole system. So that means that they would probably have to bid up oil and gas. Russia would end up exporting less, if you like, outside Russia, but they would still be exporting increased quantities in through China, India, and so on and so forth, who are prepared to take Russian oil and gas at a discount. I mean, so it's the Russians are just sort of sitting there saying, well, you got the problem, mate. You created the problem. All right, we invaded the Ukraine, but basically you've shot yourselves in the foot, and that actually is pretty well what the West has done.
Oh, it would seem so. I mean, I'm sure the U.S. will try to do what it can to. I think it's trying to send some liquefied natural gas over there and all that sort of thing. But I don't imagine that we can come close. Of course, as we come into the summer, maybe it's not as important as during the winter, but air conditioning and things like that too, I suppose, in the more advanced countries anyway, will be important. Alasdair, to what extent do you think this is a bigger deal in terms of supply chain disruptions than the COVID-19 thing, or similar, or what are your thoughts?
Well, yes, I mean, it is a disruption, but I mean, talking about supply chains, I think there are bigger disruptions in China. I mean, they've just shut down virtually the whole of Shanghai over COVID. China is still following this policy of just shutting everything down as soon as there's a hint of COVID. And that's not doing anyone any good at all. And the Chinese economy itself has pretty much stopped growing. And, that has been the production engine for the world. So I think that's probably more important in terms of supply chain than Russia, though there's no doubt about it that the Western sanctions are disrupting basic commodity supplies. I mean, particularly energy, also other commodities like fertilizer. We face, as a world, we're going to face a very difficult summer because, the Ukraine region and also that part of Russia is the breadbasket of Europe. It's also a massive producer of fertilizer, which means that countries which would look to perhaps try and maintain their grain yields over the summer are going to find it extremely expensive to do so because of the lack of fertilizer. I mean, I really do worry about the potential for starvation, particularly in the third world. And with that, I mean, particularly in places like Africa. And again, China has cornered the grain market. I mean, you've got 20% of the world's population in China who have roughly 70% of the world's wheat reserves. I mean, sort of, in stocked up, weak stocks. Rice stocks, similar. Maize stocks, similar. Soy, I think, is something like 30%. And this is leaving everybody else very, very short. I can tell you this summer is going to be one of hunger and possibly worse for an awful lot of people.
It's a very sobering thought. I would imagine with China's economy slowing down, the only thing they know to do is what every other sort of central bank does around the world, and that's just print money. The Chinese will do that. I mean, they can't have civil unrest. I mean, they've got to try to avoid that, right? And Michael was just saying also that the Japanese central bank is saying that they're going to print whatever it takes, as much money as it needs to try to keep their yield curve intact. I mean, it's just craziness everywhere. Biden's come out with a 5.5 I don't know, 5.3 or 5.8 trillion dollar budget. I mean, it's just running amok. It's almost exponential. It's this nonsense.
Yes, it's completely out of control. I do agree. About China, which was your first point.
Yeah.
China recognized the inflationary effects of the Fed's policy back in March 2020 when it reduced interest rates to zero and instigated 120 billion a month of QE. And it was really from that moment that China started stockpiling the commodities and raw materials and food, which she deemed necessary to protect her own people from the inflationary effects. And consequently, prices in China are rising, they reckon, on sort of CPI terms, around about 1% per annum. You know, they're very different from the West. They've been quite sensible. Now, they do have a property crisis, and they're trying to deal with it by expanding credit. So they're trying to, if you like, sort of, soften the landing, as it were. But you're not really seeing the inflationary policies that we see in the West. Your second point about the banking of Japan. The Bank of Japan has a huge problem, which is shared by other central banks, and that is it is now in negative equity. And what I mean by that is its liabilities exceed its assets. Now, the reason this has happened is because it has got an enormous amount of Japanese government bonds, corporate bonds, and also even equities on its balance sheet. And these are collapsing in value. I mean, particularly the bond portfolio is just really in an awful mess. And it cannot afford to see higher bond yields. And so it is desperately trying to put a cap on it. It's been trying to buy the 10-year JGB on a yield of 0.25%. It's still in negative interest rates. It cannot afford. I mean, it's just got completely caught. So we have a situation where the Japanese central bank is bust, and not only that, but the underlying big Japanese banks are leveraged on a basis of asset to balance sheet equity over 20 times. I mean, rising yields in the bond markets are undermining the commercial banking network and the central bank itself. This is a major crisis, and this is why we're seeing the Japanese yen tanking. I mean, it's falling. It's just a John Rawls situation all over again, which I know we've talked about in the past.
Yes. Well, and the Japanese central bank isn't the only one. You point out as well, the Fed and the Bank of England also have negative rates. And you pointed that out, and rates have risen quite a bit. At least U.S. Treasury rates have risen a lot since then. So I would presume that we're more negative than we were when you first made that comment a couple of weeks ago.
Yes, that's absolutely true. And the one that's really worrying, I mean, I can see how a central bank gets rescued. I mean, that's, it's easy. I won't go into the details. It's actually relatively simple to happen. It just involves the government basically, borrowing money from the central bank on the one side and depositing it back on the other in the form of equity. So that's easy. That's easy, but it's damned embarrassing. I mean, you don't want to have to do this in the middle of a financial crisis. So that's the first thing. The ECB is in a terrible situation. The ECB itself is in negative equity big time. It's got the same problem as the Japanese. We're on negative interest rates, and it cannot afford to raise interest rates because it is seeing the value of its enormous portfolio, which it's got on board, just collapsing. So it's trying to sit on the interest rate situation. On top of that, its shareholders, who would come to its rescue, are the national central banks. And guess what? They're all in negative equity as well. And you have a situation where the commercial banking network has got liabilities into Russia and Eastern Europe and goodness knows what. It's an absolute mess. And they're leveraged over 20 times on the basis of asset to equity. So you've got the commercial banks going bust, you've got the national central banks going bust, and you've got the ECB going bust. How do you resolve that one?
I don't know. I mean, that's who knows? Maybe I'm just wondering here, Alasdair, we have a flattening of the yield curve here in the U.S. That's pretended recession in the past. It's almost perfect in its prediction of it. Might we see a collapsing or say a recessionary, if not depressionary, U.S. economy and maybe around the world, and so rates just plunge again?
I've been watching this commentary with great interest because, if you've got a situation where, let's say sort of price inflation rises at the end of the credit cycle and then you sort of, end up going into a recession and so on and so forth. Yes, the yield curve does forecast, if you like, the recession. And basically what happens is that you find that the short-term rates are higher than the long-term rates. The long-term rates are telling you that you're going into the recession. This is different. This is very, very different, because what is happening is that everybody is trying to adjust to a situation where we've got hugely negative yields the whole way along the yield curve, and those negative yields are getting worse. I mean, I know we've seen the 10-year yield rise to 2.5%.
Yeah.
But I mean, when you've got a situation where CPI inflation is running at 8%, something like that. Right. Negative yields of over 5% at the moment, and that's on official numbers. So this, I think what's happened is that the long end just hasn't actually caught up with events, and you're going to see a negative yield curve, fine, going for some considerable time, but the whole thing is going to shift. And I would not be surprised to see the 10-year yielding well over 5%, maybe within the next 3 months or so, and at the long end, not too far behind. So I think this is a fundamentally different situation from saying that, a negative yield curve is a pretty good indication of, a recession. Actually, what we've got now is I think we've got runaway price inflation, because we've had runaway monetary inflation.
Right. So will they try to outrun that by printing more and more, faster and faster, exponential rise in monetary, like the Japanese central bank is doing? Or is this sort of a runaway hyperinflationary event that we see staring at us?
I think it's quite likely. I mean, the Fed has got a choice on this one. And basically, I think their mandate is to keep the system going, which basically means they've got to rescue everything. And the only way you rescue everything is by trashing the currency. And this is what's happening in Japan at the moment. I think Japan is leading the way. We were talking about the end of fiat hoving into sight. The Japanese yen is leading the way. I thought it would be the ECB, but this is a race you don't want to win.
Race to the bottom.
Yeah, I think the euro is next, and then after that, I think that this is likely to push money into dollars, into some Swiss francs, whatever. Fleeing these two currencies. So you've got this brief situation, I think, which means a stronger dollar, stronger Swiss franc, even possibly a slightly stronger sterling. And then I think that the plagues that are hitting, the financial plagues that are hitting the yen and then the ECB, the euro, I think will begin to infect us all.
With just about a minute and a half or so left here, I know that the currency reset is something that Jim Rickards and a lot of other people have been talking about. You, in your last piece, really sort of are suggesting there's no real way to go from one fiat currency to another now, if I read you right, believing that we need to go towards, I don't know if you think it's inevitable, towards some sort of a stable monetary system based on silver and gold. And I'm just wondering, with Russia's move towards demanding payment of oil in petro or in rubles, if this might be the start of something like that?
Well, it could evolve into that. A lot of people have sort of been, gold bugs have been excited by the, the central bank will buy gold at 5,000 rubles a gram. But that's basically to ensure that the gold mining industry can continue to be financed. That's what that's about. It's not about you and me turning up in Moscow with our ruble notes and saying, please want to cash it in for gold. No, it's in fact the other way around. But anyway, apart from anything else, it's not a gold standard. But there is no doubt in my mind that they are setting the pace, if you like, for the destruction of the Western fiat currency system, and we can't reset it. I mean, the governments can't reset it. It's got to be the people that do it. And I think what happens is that eventually governments have to accept that the only way they can stop their currencies going to zero is to turn them into credible gold substitutes. And that is the answer at the end of the day.
All right.
So there we are.
Yeah, we'll have to leave it go at that. We're out of time. Alasdair, thank you so much for spending time with us again and sending along your insights to all of these very complex issues. And folks, go to read Alasdair's missives every Thursday at goldmoney.com. Thank you, Alasdair.